Imagine this, you're scrolling at 2 a.m. and you see another headline about AI, but this time, it's not just about chatbots or flashy announcements. It's about data becoming a new asset class, data that can be owned, licensed, monetized, traded. And suddenly, you start wondering, what if the real money in AI isn't the algorithms themselves, but the data that fuels every model? That idea alone could redefine how investors think about tech infrastructure. Because while everyone talks about AI models, not everyone stops to ask, who profits when data becomes valuable? Here's a provocative question. What if the next generational investment isn't in the models, but in the market that values and monetizes the data they run on? That's the trend we're going to unpack today, and we're going to look at a real company, a NASDAQ-listed name, trading under $1. That's positioning itself right in the middle of that shift. Stick with me, because by the end of this video, you'll understand the why, the how, and the risks of this opportunity. Now, before I reveal the name, we need to reset your mindset, because winning in tech investing isn't about chasing price swings. It's about adopting an owner mentality, not a trader mindset, but an investor mindset. Think back to the early days of cloud computing, Amazon Web Services, Azure, Google Cloud. These weren't exciting headlines at first. They were infrastructure, boring infrastructure, until every business needed it. The ones who saw infrastructure as a foundation, not a fad, were the ones who captured the biggest gains. So here's a simple mantra to carry with you. Invest in infrastructure before the world realizes it's infrastructure. Now let's put that into the context of today's tech ecosystem. Artificial intelligence needs data to function, not just any data, high-quality, structured, licensable data. That's where our company of focus comes in. All right. Now here we go. The company we're talking about is Datavault AI Incorporated, ticker DVLT. Traded on the NASDAQ, pronounced Datavault, at roughly 80 cents per share. It fits the technical definition of a penny stock, but don't let that label make you blink. Because the business is not a penny-level idea. It's a data infrastructure play with real revenue, real growth, and real partnerships. Datavault AI's mission is to help companies assign financial value to data and to tokenize it, and to generate monetization streams from assets that were previously dormant. In other words, they're building systems that allow enterprises to license data, much like licensing software or intellectual property. This isn't just collecting user logs. This is turning enterprise data into recurring revenue streams. And that's where the future of digital business could be headed. Because data is the new oil. But oil only has value when it's refined and sold. Let's talk about the real numbers, because that's where the credibility lies. Datavault AI's trailing 12-month revenue is about $6.2 million. Meanwhile, the company's market cap sits near $413 million. That's a high revenue multiple. But that's what early-stage infrastructure stories often look like. Instead of focusing on current profits, the market is pricing an expected future growth. And there's reason for that expectation. For full year 2025, the company's revenue guidance is in the range of $30 million to $60 million. That's a massive jump from around $2.7 million in 2024. And for 2026, management is guiding revenue above $200 million. Now, nobody can promise that will happen, but that's the story the company is selling. And the one Wall Street analysts are starting to model into their projections. Beyond guidance, there are real operational signals. Datavault AI has been signing licensing agreements with strategic partners across data, AI, and defense sectors. There's also a $150 million strategic investment intended to support commercial rollout, which shows institutional interest in scaling the business. Let's break down recent quarterly performance. In the second quarter of 2025, Datavault AI reported $1.7 million in revenue, which represented a 467% year-over-year increase. In the third quarter of 2025, revenue jumped to $2.9 million, a 148% year-over-year increase and 67% sequential growth. That's the kind of acceleration that gets investors' attention because it tells a story of expanding adoption, not just one-off deals. Now, let's talk valuation in terms you can visualize. If the current revenue base is roughly $6.2 million and guidance points toward $30 million and beyond, the multiple on revenue compresses rapidly as growth arrives. Right now, the stock trades at about a 67 times revenue multiple. That sounds steep. But imagine revenue reaches the midpoint of 2025 guidance. Say, $45 million. Then the effective multiple becomes about 9 times revenue. And if 2026 hits $200 million, that multiple drops to around 2 times revenue. That's a dramatic re-rating path. And that's the valuation logic under this story. Let's put this in perspective with peers. Companies like Snowflake and Palantir are well-known infrastructure names, trading at revenue multiples in the mid-teens to mid-20s because they have recurring revenue and scalable enterprise adoption. Datavault AI is his earlier stage, riskier, but chasing a similar theme: data infrastructure for enterprise adoption. Now, analysts are starting to weigh in. The average one-year analyst price target sits near $4, which suggests roughly plus 400% upside from the current trading range. Remember, these are not guarantees, they're models based on assumptions about revenue ramps, market adoption, and monetization success. But it's meaningful that the street is even modeling a target in that range, because penny stocks often go ignored by analysts entirely. To help you process this, let's frame it in scenarios. Conservative, $1.50. This assumes revenue ramps more slowly, licensing takes longer to convert, and growth is delayed. Base, $4. This matches analyst consensus, assuming revenue growth accelerates toward guidance. Bullish, $7 plus. This assumes 2026 revenue targets are met, and the market re-rates the business as recurring infrastructure. Now, let's be honest about risks, because you should never ignore the downside. Datavault AI is not profitable yet. Their net income is negative. That means growth relies on capital, which introduces dilution risk. If the company issues more shares to fund operations, your ownership percentage could decline. There's also execution risk. The company must convert licensing agreements into sustainable recurring revenue. Timing matters. If contracts take longer than expected to ramp, the valuation could stagnate. Regulatory risk is present too. Licensing data and monetizing digital identity intersects with privacy laws, and those laws are tightening in many jurisdictions. And because DVLT is a small cap stock, it can be volatile. Price swings can be large and sentiment-driven. So here's the psychological framing you need. This is a high-risk, high-optional return trade, not a guaranteed winner, but a story where the upside is significantly larger than the downside if execution clicks. Now let's bring this back to you. Imagine 2 investors. One says, "I wish I had bought this under $1. The other says, "I saw the data infrastructure shift early, and I held through volatility." Which one sounds like a disciplined investor? That's the mindset shift we're asking you to make. From chasing price action to understanding structural growth opportunities from a portfolio perspective. Datavault AI connects to several macro trends: data ownership and monetization, Web3 and digital asset infrastructure, AI enterprise adoption licensing, and IP monetization models. If you own big tech names like Microsoft, Google, or Amazon, you already own exposure to parts of the AI and data ecosystem. Datavault AI is a smaller, riskier complement, a way to play the same theme from a different angle. But it should not be the only stock you own. Diversification matters. No single investment defines a long-term portfolio. Now here's a question for you. Do you believe data monetization will become the next major infrastructure trend? Or is this still too early? Drop your thoughts in the comments. And remember, nothing here is financial advice. This is education, analysis, and logical context, not a recommendation to buy or sell. Before you go, here's your takeaway. Datavault is not a typical penny stock. It has real revenue, real strategy, and a real attempt to build infrastructure for the next era of data monetization. The market is pricing it as a high-risk bet today, but if growth materializes as guided, it could re-rate into a much larger business. If you want more deep dives like this, with real numbers, real context, and real understanding, like, subscribe, and hit that bell. Next video, we're exploring another under-the-radar tech opportunity with a completely different angle, but tied to big macro themes you need to know. Stay smart, stay curious, and remember, the smartest investors don't chase hype. They recognize infrastructure before the crowd does.